Hey guys, welcome back. It's been a long time since I made another video. Things have been crazy lately. This year has been kind of stacked with me starting university and taking finals and Christmas break and all that, and I haven't posted a video in a long while, but I'm gonna try and post more often now. I just bought a new mic. Hopefully it sounds better and it's gonna improve the quality of my videos a little better to a certain extent. So right now we're watching the whole market. As you can see, more stable sectors such as financial sectors, industrials, energy, consumer defensive sectors, utilities, basic materials are all green right now. But big tech like Microsoft, Apple, Nvidia, you can see down 5% right here. Amazon, Tesla almost at 5% as well are currently down. Things are gnarly in the market right now. So the reason why Tesla's down is because they opened a showroom in Xinjiang, China, and that's receiving criticism and some other things right now. My positions are ARK, and it's not going too well right now. It's took a fat dip right here because of the holding, since ARK holds 7% of Tesla, Roku, Teladoc, Zoom, Coinbase, and all those are big positions in ARK, in ARK's innovation ETF, and they're currently down. Overall, down $700, which is, a big price, but it's fine. Trying to make it consistently by selling covered calls, which I'm going to explain today. So what are covered calls? So let's just say you have to have 100 shares of an underlying stock, that being whatever stock you want, Snapchat, Apple. For this instant, I'm doing ARK because I currently own 100 shares of this position. So we click trade options. So you have your expiration dates. You can click on it. You can see January 7th all the way up to like 2014 of January 19th. So we can scroll. Let's do the 7th. So we want to click sell call, not buy. We're selling covered calls right now. I started doing a wheel strategy, but I found that the selling covered calls is more productive, in the sense that I keep my stock and I just keep moving the strike price up higher and higher, and that way I don't lose my position and I make a nice little chunk of premium weekly, or sometimes twice a week if I sell it for a quick gain, like I did today and this morning since the dip happened. I bought a covered call yesterday. Here I made a spreadsheet for 2022 plays. I'm gonna try and keep track of everything I'm doing so far. First I received ARK's dividend, which was a premium of $78.27. There's no closing cost. It's a dividend, right? The profit was $78.27. Yesterday, January 3rd, 2022, another ARK, but this time was a call, $71 premium. Closing cost today $19 because of the fat dip, and I came out with $52 profit, which was really nice. Today I'm gonna try and open another position as a demonstration for this video, and here, let's show you what we can do. So let's close this tab real quick. Right here, the dividends, pretty good dividends, but then the dip because of those positions. But let's get back to it. So you want to start selling covered calls or the wheel strategy or whatever, but this example is going to be about the covered calls. I have another video about wheel strategies, but hopefully I can make a revamped version so the audio could be better and I can clarify some things I left out in the previous video. But let's say the strike price right now is $91.32. You have 100 shares, by the way. You have to own 100 shares to sell covered calls. So $91. ARK varies because of its position, such as Tesla is quite volatile, so I want to have a nice distance. So expiring the 7th, that's on Friday. Today is Tuesday, so let's do 91.72. That's too close. We can do a nice little 95.22 right here, strike price. It's almost like a $4 difference, which equates to $400 difference since you own 100 shares. So to see how much money you're earning with these covered calls, just take the premium, which is 57 cents. You multiply times 100 because that's your position, and then you get the premium, which is $57 essentially. So it says I have a chance to profit of 82%. Is at 95.22 is the strike price expiring Friday. So that's not bad. $58 to hold this position on Friday, and if it passes $95, I have to sell my position at $95.22, which is not bad because you're still getting the premium plus you're selling your shares here. In this case, I bought at $98 average. So if it does execute here, it will be selling and I would be losing money. But the reason why I'm comfortable with the strike price is because it's $5 out, and ARK already had a dip of almost 6% in one day, and I don't think it's gonna pass $95 until Friday. So we click here, $95, and then you don't need all this stuff right here, the bid, ask, you know, delta. This doesn't really matter just because of the fact that you're holding it, and it's theta gang strats in terms of you're just selling premiums, covered calls. Click here. So the max loss is unlimited in terms of you would sell your shares for a profit, right? In terms of it goes above $95. So another thing is to keep in mind, if it doesn't go, the reason why this is such a good strategy is that, let's say ARK closes at 94.22, you still keep your shares and the premium. Nothing happens. It's just like nothing happened. You just earn a nice little $58, $57 as it keeps moving. But if it does go over the strike price you selected, you're gonna have to sell those shares at the strike price, but you also keep the premium. So that's why you want to get good strike prices, in terms of that one day you do get executed, you want to have the possibility of making money off of that. But for me, I want to own this long term, in terms of I truly believe in the company ARK Innovation is currently holding, such as Roku, Teladoc, Tesla, and so on. You know, all those tech stocks, and all those stocks are going to revolutionize our world in terms of technology and AI and all that stuff. So I click here, 95.22 strike price, continue. It's one contract. We can do a nice 57 just in the middle, 55, 62. Review order. Remember, make sure that it says sell call. Don't buy a call. That's a naked call and it won't work the same way. And a put is different too. So I'll make another video about puts, I guess, since we're only talking about calls. So first you click accept. Collateral, 100 shares of ARK. You're agreeing to sell 100 shares of ARK at 95.22 before January 7th. If you're not asked you to sell your ARK by then, you'll keep your collateral and the full $57 credit. So yeah, pretty much what I just said. Submit, continue. I'm gonna get a code here because, you know, safety, why not? Okay. And there we go. We executed a nice 62. Oh, what the heck? Let's see, $62 credit. We go back up here. There's my account. It's currently down $500, as you can tell, because of ARK's dip. That's the majority of my position. It's ARK currently. I got some positions in Riot too. 36 shares of Riot. I'm trying to get 100 shares so I can do the same strategy with Riot and just keep growing my account from there. So we just got a $62 premium added to our buying power, expiring the 7th, which is Friday. And if it expires Friday, you just made $62. So we can add that to the spreadsheet. Premium, $62, right? Nice. Closing costs, I'm not gonna put that yet because we haven't done anything. Profit, not yet, because, you know, we haven't closed. Expiration, 2022. And I'm just gonna have this open and keep, you know, copy pasting the style of this, because I just want to keep track of what I do this year. Last year I was doing trades willy-nilly, not keeping track, and it's kind of hard going into Robinhood and checking history all the time. So it's good to have a spreadsheet so you can keep track of your trades, of the profit and loss, you know. And for me, I'm just gonna keep track of my profit, because for losses I can just look at that when you buy a stock. But yeah, this is how to sell covered calls. A quick recap. You have to sell a call, pick expiration date. Remember, trying to focus on distance and nice premiums, but not too much of the premium. For example, 95.64, you can get almost $200 from this, but it's about to expire. unless you bought ARK like at $80, $90, something under $91, I do not recommend collecting such huge premiums with such high risk. For me, I find it better to hold onto a position and make a decent, nice little chunk of cash weekly consistently. But yeah, a quick recap. If it's above 91.65, you pick strike, let's say, whatever, 91.22. If it's above 91.22 at the end of expiration date, let's say it's $92 by Friday closing, market closed. For us, Central Time would be 5 p.m. I believe. Let's say above, you would have to sell your positions at $91.22, but you still collected the premium. If it's below $91 and it's at 90.72 like this, you would collect the premium and you wouldn't have to sell your position, so you get free premium essentially. You're making money off of people who are buying naked calls, and since there's so many uneducated people out there just buying calls about to expiration date, you know, trying to get a Wall Street bet gain right there, well, you can capitalize off of that and get some consistent gains to slowly grow your account. Interesting fact I figured out recently. I watched a couple of videos to try and educate myself. If it's earnings or something eventful, the IVs are high, premiums increase massively. So like if there's a release for gains of the thing or just something with high IV, like a news thing or earnings date, the premiums increase sometimes double or 3 times their usual value. So that's when I highly recommend to sell premiums instead of worrying about IVs. Use sell calls or sell covered calls like this, or sell puts, and you just make a nice chunk of change. Like a couple of weeks ago, Riot had a earnings and their premiums were almost like 2.5 times the normal worth. You could sell a covered call and make $200 off of it for 1 week, which is pretty gnarly. So yeah, guys, that's my video. You know, try and keep track of what you do. You know, just don't pay too much attention to like day trading and stuff like that. Just find a consistent method, stick to it, learn it inside out, and then that way you can, you know, try and be successful in the markets. You know, time in the market beats time in the market. If you believe in something, buy in, hold it strong, buy more. Just don't, you know, quick cash, sell here, grab that. You know, each person has their own method, but you know, wish you well. Oh, by the way, we changed our channel name. We're trying to trade now. I just thought about it randomly and I'm like, you know what, I'm just gonna name my channel this. I didn't like the name I had. I think it was too complicated and too long, and I can just be addressed by TTT, I guess, or whatever. Hopefully I'll be putting out more videos like this, educational or something related to that. And yeah, take care. Thank you for listening, and I hope you guys have a splendid weekend, rest of the year, and hopefully this year can be something different and, you know, turn around. See ya.